How can you invest and make money in today's real estate market? Welcome to the Successful Investor Show, where we talk with successful real estate investors, business owners, and busy professionals on their journey to wealth. They share their best ways and advice to make massive gains in today's market. Make sure you are subscribed so you never miss an episode. Now, here is your host, Doron Nissim.
Welcome everyone to the Successful Investor Show, where we talk about how to passively invest and create passive wealth through real estate and businesses. I'm your host, Doron Nissim. I've been investing in real estate for the past 15 years, and today I have the pleasure to have John Laine here with me. Hi, John. How are you doing?
Good, bud. How are you? It's nice to be here. Thank you for having me.
Thank you for coming. I'm excited to have you. You've been into the real estate game for the past 35 years. You have an amazing story. You actually started at the age of 16 when you lost the first house, your family home. And then you bought your first property at 19. And after that, through 2004 till 2008, you bought 500 properties.
Yeah, pretty much a house a day for several years.
Yeah, and then after that, I mean, the whole real estate collapse. And you had a portfolio about $77 million. And everything collapsed, and you were part of that. So yeah, I want to hear all about it, all your story.
Yeah, it's an interesting. Thank you for having me. Truly, I enjoy the ability to share. It's a weird, crazy story. I'm very, very interested in helping other people not repeat my mistakes. So yeah, I'm a cautionary tale in a lot of ways. But yeah, I lost $77 million worth of assets in 2009. We had a bunch of single family res. We had 400 some odd single family res, and then we bought an 13-story apartment building and financed by Lehman Brothers. Like, you know, the rest of the story. Lehman Brothers closed, and it was a giant domino, just event of, we went from 77 million in assets to $5 million in debt in the course of a couple months. It was kind of crazy. Yeah. That's kind of the gist of it. Where do you want me to go? What do you want me to talk about?
So, I mean, you were buying all those properties in North Carolina, in Georgia, in that area of South Carolina. So I want to hear and share some insight of why everything collapsed. I mean, the whole real estate collapsed, but why did your properties actually lost value and you had to return them to the bank? What happened there?
So I made two core mistakes, right? Very, very clearly. So a lot of people talk about leverage, right? So the two cardinal rules in real estate: location, 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 and leverage, 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 right? I worked those two angles pretty well. I picked a great location. I knew that we could buy houses very inexpensively. I knew we would buy a house for $15,000 and $25,000, throw $25,000 into renovation, and then sell them for $75,000, right? So that was the core business model for years, between specifically 2004 and 2008. We were buying or selling a house a day, and that was our model, and it was working great. Everything was going fine until Lehman Brothers closed and all the banks started failing. And the problem that we had, all of our houses, all of our properties were on a fairly thin line between Charlotte, North Carolina, Spartanburg, South Carolina, and Greenville, right? And the two biggest employers, this is the location, location, location problem. The two biggest employers were Michelin and BMW, and those plants closed. They laid off thousands of employees, and most of those employees were our customers, our clients, our renters.
Wow.
And yeah, so we had we went from 7, 8, 9% vacancy because we're rehab. We always had a higher vacancy number, but we went from 7 or 8, 9% vacancy down to 30% of people were still living in the houses, but they couldn't pay rent.
I see.
So that's problem one. And then problem two, we had bought this 13-story apartment building in March of 08. It was supposed to be a condo conversion. And we got $1 million, we fixed the roof. We got $1 million, we started taking windows out. We got $1 million. So we would do these construction pieces, and then August, September, no check, no money. I have $300,000 worth of windows sitting in a parking lot with no crane and no ability to install them.
Wow.
And yeah, it was a disaster. Lehman, I will go to my grave thinking that we were 70% leverage, or better, right? 30% equity or better in everything we owned. And yeah, Lehman closed, and it was this giant domino effect.
I see. So basically your model was buying cheap houses and in the single family space, buying cheap houses, renovate them, rent them out, and then resell them to other investors and make the spread in between, right?
Well, none other investors, just retail buyers.
Retail buyers.
Yeah, we buy it for 25, throw 25 in and sell it at 75 to retail buyers.
Right. And some of them you kept as rentals, but because the whole market collapsed, companies shut down, everything shut down, and people couldn't pay rent. So you had to get out of those properties. Wow.
Yeah, it was literally, I sat home one day, I had a notary public on one side and a bottle of rum on the other. And I would split, and I'd sign my name. I'd take a hit and I'd sign my name. And I mean, I gave away $77 million back to the banks.
Wow. So it leads me to my next question. You're like an expert in foreclosures. You've been through so many, and now you're expert in this foreclosure thing. So what can you tell us about how can you help people? What do you do with foreclosures in particular?
So when I was sick, when I had there was a period of time between 2001 and 2004 where I had this golf ball sized brain tumor, and I ended up losing my house in a foreclosure. And I had 9 months to sit and read. So I read every book I could on bankruptcy, every book I could on real estate, and every book I could. This is pre-internet, guys, right? These are library books.
Amazing.
I know. Yeah, nobody gets it. I know that somebody's going to be typing in the chat. What's a library? But this is pre-internet for the most part, and my ex-wife would go to the library and she'd find books on foreclosure, and I created a system where I had a whole list of investors. I would talk to the foreclosed person, the person in foreclosure, and we would buy the house, lease it back to them, give them an option to buy back in 3 years. The foreclosed owner would stay in the house, retain most of the equity. We'd split the equity 50-50, but that person that we're helping would keep all the appreciation over the next couple of years. So they'd get a hell of a bargain on buying their house back, and then we'd lower their monthly payments so they could actually afford to stay there. It was really pretty amazing. We've helped hundreds and hundreds and hundreds of families.
Wow.
Yeah, it was
wow,
cool.
and that's amazing. That's an amazing program that you created to help people and help your business, thrive through that area of foreclosures. Yeah, I love that. So, You did so many transactions, so many houses you bought, sold, commercial, things like that. So I wanted to ask you, is there a specific deal that was like the best deal that you can share with us?
It's a little corny. It's the first house,
Wow.
right? It's the very first one, like is the best deal, right? With the Skylar transaction, right? The 13-story apartment building, I walked out of escrow with $962,000. Like that was a 9-month deal to put together, and I walked out with basically $100,000 a month. That was my best like signature deal. Like I made this much money. From that point on, I valued my time at $1,000 an hour. Like that's my minute. If I'm gonna work, that's my expectation for working. I'm gonna make $1,000 an hour. But if you want to know the real best deal I ever made, it was buying my very first family home. And nobody ever really thinks about how important that is. Buying your first home is the single most important financial decision anybody can make.
Yeah, definitely. I remember the first house that I bought in Fayetteville, North Carolina, and I made all the mistakes possible on that house.
What happened? What happened? Like, what's your first house deal?
The first house that I bought was it was actually a flip that I bought the house and I didn't know who to hire to fix the house. I actually waited outside of Home Depot and talked to guys and see who wants to come with me to see the house.
Like you have this giant target on your back. I'm a sucker. Take advantage of me.
Right. That was 2010, I think. And I mean, eventually we renovated, we fixed the house, we sold it, we made some money, but it was a great experience. It took us so much time, but yeah.
It's amazing to me how few people. I was just reading this the other day. 100 million families in the U.S. live in apartments.
Wow.
Like it's a shocking number. And the difference like 60, what's the number? 60, I got that wrong. 100 million people live in apartments. The national statistic for homeownership is 63%. So 33% of all of America live in apartments. And buying that first house is the singularly most important deal anybody can make.
Right. Yeah, definitely. I mean, and that was a big goal of mine to start investing in real estate after everything collapsed. So I just jumped on the opportunity, and it was one of the first houses that I saw. I said, this is a good deal. I'm going to buy it.
Well, the fact that you did it, right? I mean, 2010, that is the bet. I mean, in my entire career, that is the single best moment to buy houses.
Right.
Because the bottom was out and they were just starting to go back up. And that you couldn't have made a better decision. That's a good.
Yeah, and I always say that I wish I kept all the houses that I did, buying and selling, but I wish I kept everything, then I would be set for life now.
Yeah. Well, and the whole idea of real estate is based on leverage, right? Buy one, fix it, sell it. Buy another, fix it, sell it. Buy another, fix it. The whole idea, the whole premise is leverage. Mm-hmm. And I learned the hard way that leverage, it works. I don't want to paint a negative picture, but cautious leverage. Right. You sell. How many houses have you bought and sold?
Oh, I think it's close to 1,000.
No way. Really?
Yeah. So bought and sold through flips, wholesale, joint ventures, things like that. It's close to 1,000 houses.
Wow, that's pretty amazing. That's
big. I mean, through 13 years or 15 years doing that, so it makes sense.
And your website, right? It's what is it? Sell me your house or sell this building or
Sellmybuildings.com.
sell my building. That's the greatest wholesaling website I've ever seen.
Right.
It's straightforward. Sell my building.
Yeah.
That's
It's one of the it's one of my websites for sellers to sell their properties.
So how many deals? So in a week, you must be getting offers every day.
Yeah, on a daily basis, that's what I do. I deal with sellers and buyers on a daily basis. I signed 2 contracts today. So
I did 2 podcasts a day. I'd much rather sign 2 today.
I wish every day was like that. Let me tell you.
That's pretty good though, right? I mean,
Yeah.
So how many people do you have working with you?
Well, my team is about 10 people. Most of them are VAs, like remote workers, remote employees, and I have 3 people in my office.
Well, that's a pretty good setup. 10.
Yeah.
I because I'm old, I never had VAs, right? I had a staff, a full-time in the office staff, right? And the idea of having, I mean, we had 19 people. I had one person, her only job was to deal with insurance issues, fires. We call the coroner every couple of,
Wow.
We had 3 coroner calls, right? I mean, we'd have a fire a month. That her whole job was to deal with the problems of real estate.
Wow. Yeah. So I wanted to ask you the next question that I have for you. I mean, did you have like a worse? I mean, I know you've been through like a lot of foreclosures and collapse and things. What was the worst deal that you did that you can, tell us and we can learn from it?
Definitely, my business. I had single family res, hundreds. I was an absolute expert in the space of single family res, and then I saw this stupid building. And to this day, I wonder if my business would still be alive because it was the building that took us down, right? We had lots of equity. I wonder to this day whether I could have kept the rest of the portfolio, the single family res, because had Lehman Brothers not closed, we would have been fine, right? We were in good shape. We had $500,000 a month in cash flow. Like we were okay financially. We just had a 13-story brick nightmare or concrete nightmare that we couldn't do anything with.
Wow. So with that being said, what if you can pinpoint the exact thing that made this deal don't work? Like what happened?
If you're an expert in one thing, single family res, stay in that one thing, right? It's when I got too big for my britches, when I thought I could do a normal garden style apartment, right? It's 2 stories high and 150 units.
Yeah.
Way easier than a 13-story building, right? It just, the management is easier. I just made the huge mistake of thinking that I could do something I'd never done before on that big a scale.
Yeah.
But I stayed with single family res. My portfolio, I mean, 15 years later, I'd probably still be in single family res.
Yeah. Yeah, and I hear that a lot, that when you transition from, because it's coming natural to people. They do a lot of single family and then they want to move to commercial because it's bigger and more sexy. They want to make more money, so they move to commercial. But a lot of the people, they don't have the experience needed to buy a multifamily or commercial property and do it properly. So they'll go to a commercial property. They'll say, okay, it's a regular fixer upper. I can fix it up. And it doesn't work like that.
I thought that's exactly what I thought. This is back in the condo conversion age, right? Where we bought this building for $3.3 million. The plan was to put $6 million into it and sell it for 12 or 13 or 14 million dollars. I thought I was looking at something that was going to make me $4 million at a minimum.
Mm-hmm.
And so it was, I got stupid and I got greedy. Like, there's no other good way to say it. I got stupid and I got greedy.
Yeah.
And like one of the biggest lessons I can tell people is take money off the table as often as you can, diversify your assets, diversify your location, because I was so concentrated in one spot.
Mm-hmm.
All it took was a one hiccup in the economy.
Yeah.
Yeah.
Yeah. So it leads me to my next question for you. In our economy today, the market is kind of shaky. People doesn't know where it's going to go, and banks are today they're here, tomorrow they might not be here. So what are you doing in your business to mitigate the risk in today's economy?
So that I love answering that question. I think about that question every single day. So go back and think about what happened. In 2007, 8, and 9, 200 small banks failed. Big banks failed, but 200 small banks failed. In the last 4 or 5 weeks, 4 different banks have failed. Those 4 different banks total all of the banks that failed in 2009. And we've only had 3 or 4.
Wow.
From the very beginning cusp of what looks to be a $1 trillion problem. I have a hard time picturing what a $1 trillion problem looks like,
Mm-hmm.
but that's what I'm seeing and that's what I'm prepping for. I'm doing my transactions in cash. I'm not doing leverage. Here's the thing. If you have leverage, some other bank has leverage over you. They control you. It doesn't matter how good a business operator you are, the bank is going to control whatever you do. And so my whole business philosophy is counterintuitive. I don't take on debt. I want to fund everything 100% cash. I want to be known as the own your asset guy.
Wow.
Right. I want to be 100% ownership. You mentioned all those properties you owned or that you participated.
Yeah.
What would happen if you just took 20% of every dollar you got and just paid off a property? Just every time you got money,
Right.
pick one property and pay it off.
Yeah.
Yeah, that was the hard lesson. That's kind of, I'm seeing that we're walking into a $1 trillion problem.
Wow. Scary. Scary, but also I like that because they say there's always an opportunity, and if you prepare for it, you know it's coming, you're going to be able to take that opportunity and make something good of it. So
I just 3 days ago, I talked to a young man who wants to get into real estate investing, and he's telling me, yeah, the bank, he's in Utah, right? Booming market, great market.
Right.
His bank tells him, hey, we'll give you 105% loan to value on a
Wow.
HELOC. Does that sound familiar? Because that's exactly what happened before. The banks are offering 105% HELOC.
I'm surprised.
And it's just a signature loan. It's
Wow.
exactly what happened before.
Mm-hmm.
That happened 3 days ago.
I'm surprised because I thought they're very cautious and they're checking and not doing loans, and I'm surprised that he found a bank that's willing to do 105% line of credit on his property. That's crazy.
Yeah, it's bonkers. I was flabbergasted when he told me. But it's Utah, right?
Right.
Hyper conservative underwriting. Their properties are literally doubling in 5 years.
Wow.
Utah is one of the hottest markets in the country, And I mean, they're getting 8, 12, 15, 20% appreciation.
Wow. And
Banks
you,
are
you think it's going to keep going like that?
in Utah.
Mm-hmm.
Yes, partially for a little while. I
Mm-hmm.
think I mean, this is just me with my crystal ball, right? Me with
Yeah.
my crystal ball. We have 9 months of prosperity ahead of us. We're not quite to the cliff, but we're really close to the cliff.
Mm-hmm.
Um,
Wow. Let's see what happens. So,
so I'm going with all cash. I'm gonna
and
park
it's amazing that you're telling me that, because I haven't heard that from nobody, that they strictly cash, no leverage, and just buying everything cash. I mean, no one told me that.
It's
So
weird. I mean, yeah, it goes against every real estate book you'll ever hear. I bought into the whole no money down from Robert Allen and Carlton Sheets, right?
right,
That's how I got into real estate.
yeah,
And everybody talked about 100% leverage, get it on contract, don't take debt that's yours, right? So
right,
the sub two. So half of these properties that we did in South Carolina were sub two deals,
wow,
right? We take it subject to the existing financing. They
mm-hmm.
give us the properties.
They just give it away, yeah,
Give they could be fully rented tenants, and no, I am going 100% cash.
wow,
What's mine is mine. No one is ever taking it from me again. And I have a startling number of investors who genuinely want that hyper conservative underwriting. Because
interesting,
what happens when you get all cash, right? You get immediate cash on cash returns,
right,
right? So you buy a $5 million property and it's producing $600,000 in gross capital for the rents. All of a sudden you're at 12% cash on cash. That's pretty good when you've got
yeah,
inflation at 8% or 7%.
right. I
So,
mean, yeah, usually when you buy with leverage, your cash on cash will be, 20%, 18%, between 18 and 22%, stuff, crazy percentages, but you never know what's going to happen. I mean, if they don't pay, you're back to negative cash on cash. So,
and you run the risk of someone else controlling your fate.
right.
And I've talked to enough investors out there that all rode through and lost. I mean, I've talked to people that have lost as much as I did or more. And we're all hyper. There's a large contingency of real estate guys out there. They're hyper conservative on, they don't want to lose the cash again. They don't want to
Yeah.
lose.
Yeah, and I agree with that. Definitely, I agree with that. So I want to move forward to the success round of 4 fire questions.
All right, cool. Yep.
So the first one is, what is your 3 best success habits that you do in your life or your business?
So you can't tell, but I'm really overweight. I've started walking 3 miles a day, no matter what, at 6 a.m. I've lost, I started at 360. I'm down to 319. It's slow, but walking, like that's
No,
success number one.
definitely. So about 49
Honestly,
pounds.
having an awesome wife is probably the most important. Like let's move that one to the top. But having a successful, happy marriage, like that, I know that's a weird thing to like point to, but that's probably my most impressive success story. Because my wife, we met when I had roughly $50 million in assets. She stayed with me when we were at almost 80, and then she rode the ride to the bottom with me.
Wow.
So I wouldn't be anywhere without my wife. So that's success number 1 and 2. 3. Say it again. What's the question again?
What's your 3 best success habits in your
Okay.
life or your business?
Exercise, happy marriage, exercise. Third one is
Something that you do on your daily basis that keeps you going.
therapy. Mental health issue.
Whatever works.
Right. I've been seeing a therapist for a fairly long time now. Like people who have been through major losses like I have serious deep mental scar tissue.
Yeah.
Therapy, I see my therapist every Thursday, 9 o'clock, no matter what. There's no scenario where I move my 9 p.m. on Thursday appointment.
Awesome. Yeah.
My life.
I love that. And I love your honesty and that you're sharing this with us. So it's amazing.
Thank you. It's hard. It's not like, believe me, Melissa's my therapist. She'll never hear this, but we've had conversations about me sharing my story.
Yeah.
I was hyper intimidated by it. I did not want to share because of the shame and guilt and all that. I stood at the top of that building a dozen times thinking I was going to jump. Like it was.
Oh my God. It's amazing. I mean, it's amazing that you overcame all that and you keep moving forward, pushing forward, buying and doing everything that you can to be successful after all that. It's an amazing story. And that's your life basically. So
real estate has been this weird through line. I haven't done a real estate transaction in 15 years, right? This is my first deal getting back into the gig, and there's no system, no job, no IPO that is more reliable than real estate. 98% of people who are millionaires start with property.
I always say that real estate is, you have a love-hate relationship with real estate. It's crazy. Yeah.
Whole business. Okay, next question.
So next question. What is a good resource that you use in your business on a daily basis, or something that you use to help you?
Yeah, Calendly. It's the greatest tool ever.
Yeah.
I love this, right? You and I would never have met in any other scenario. So being able to talk with people literally around the world at ease now, I mean, these are tools that my first real estate transaction was 2.5, 3 inches of paperwork, free fax machine. Right?
Oh my God.
So when you talk about like, oh, what are the cool tools? I was in Texas on the train, right? What's called the DART. I was on the train. I'm signing an EMSA, earnest money and sale agreement, on DocuSign, going 40 miles an hour backwards. Like that's just miraculous to me. Like when you ask me, like, what are the cool tools I use them all. Right. Automation, the tools, the tech. I use them all. I love AI. Oh my God. If you haven't, have you played with AI? Have you used ChatGPT?
Yeah. I have my own model that I'm training right now to be a duplicate of me. So
no way, really?
Yeah.
God. I wrote an ebook in less than 20 minutes.
Yeah. I just read that Amazon is full of AI books and they don't know what to do anymore because there's so many new books coming to Amazon and it's all written by AI. It's so funny.
Yeah, it's cool. I love it. So yeah, when you ask me what tools, God, I have a list.
Yeah.
Cool.
So the next question that I have for you is, what are your 3 tips for people to make money in today's market?
That one's a little bit more complicated. If you haven't bought a fourplex, buy a fourplex. get 2 or 10 or 20 of your closest friends my ebook, which you mentioned. It talks about the power of house hacking combined with syndication,
Okay.
right? You find one person who wants to live in the property, and you find 10 people who want to help you finance the property. And now all of a sudden you've got this tribe of 10 people all systematically making money from that one transaction. So, I mean, that's the first and best piece of advice I can give. Figure
Yeah.
out how to buy one small multifamily.
All right. Yeah, love it. You have other tips?
Pay cash. We covered that one.
Yeah.
I did a lot of subject to, and when I first started, and that was pretty valuable. In this day and age, I think that's a little risky.
Yeah, I see that coming to the market a lot. I see a lot of deals subject to and owner finance. I see a lot of them.
Yeah, I think I mean, it's a great way to start. And if I were gonna start, if I'm giving advice to my 25-year-old self, I would definitely start that way. But take 20% of every dollar you make and just pay off one house at a time. Use the rents, pay off the house. If you're capable of buying your first house, then you have enough cash to sustain your own life. Dump every dollar that you get into paying off the debt. And then you creating your own bank that is a lifetime asset.
Exactly.
Yeah.
Yeah, I love that. So my last question for you for today is, if for people that have a full-time job and they love real estate, but they have no time, they can't find the time to do real estate, what is your suggestion or advice for them?
Find a syndication group, right? Whether it's you, whether it's me, there's 1,000 syndication groups out there now. Everybody's got their niche. It might be you could put $25,000 into a self-storage. You could put $50,000 into multifamily. You might put $100,000 into a medical office offering. But find a syndicator that you know and trust and understand the deal, and just start throwing money into it. I'm a big fan of families working together. I'm really a big fan of, I mean, my family is super important to me. They've helped me through it all. If you've got grandma and Uncle Jim and Aunt Susan working together, that's a really good way to start getting into the real estate world. Build a syndication within your own community.
Oh, wow. I love that advice. So just build a syndication around your family, around your friends. Or if you don't have time for that, just find somebody that you like, trust, and can give you the returns that you want.
Yeah.
And do that. Yeah.
There's so much money in the stock market, and the stock market is entirely too volatile.
Right.
Real estate can give 5, 8, 12, 18% steady returns pretty consistently.
Yeah.
And I mean, and it's not going to go down in value.
Yeah.
I mean, crypto, it's not going to go to 60 and then 20.
Yeah. I mean, talking about benefits of real estate, you can go from today until next week. There's so many benefits for real estate. I mean, people like the stock markets, but they don't understand that real estate is the real thing. So,
well, and high income earners, right? You were talking about, like, if you have a day job,
right?
The tech. I'm in Seattle. I'm in Tacoma. You've got the tech community, and those guys, they're high income earners, $200,000, $500,000, $1 million a year in salary. Real estate, you can get tax benefits to eradicate the cost of that salary, because that salary has a cost, and the real estate if it's can eliminate.
So if people want to get in touch with you, they want to hear more about you, and they maybe invest with you, how can they find you?
All right, super cheesy, just like me. ratracerescue.net.
Okay.
Yeah, look, guys, if you haven't figured it out, I take life very lightly now. Ratracerescue.net. Cheesy, just like me. John at ratracerescue, JOHN. Yeah, I'm easy to get in touch with. I'm on LinkedIn a lot. Connect with me there.
All right, so there you have it. Thank you so much, John. I enjoy so much having you and doing this conversation with you and learning so much about you and your business. And I'm sure our viewers will love that episode.
This was a lot.
Thank you so much for listening to this episode of the Successful Investor Show. If you're enjoying this podcast, please feel free to rate, subscribe, and leave a review wherever you listen to your podcasts. That helps others find the show, and we greatly appreciate it. Once again, thank you for tuning in, and we hope you'll join us on the next episode of the Successful Investor Show.